All right, so I've been keeping a basket of coronavirus-related stocks that might actually benefit from this pandemic, and it's had the obvious ones, the WalMarts, the Costco's, but I've been keeping one in the tuck that looks really good. It just triggered yesterday. I'm excited about the trade. Let's go over it. 2-minute trade review. All right, so Grocery Outlet, GO. It's a supermarket company that offers discounted, overstock, and closeout products by name brands and private companies. In essence, if a company overproduces a product or they change the labeling on a product, they sell this to Grocery Outlet for a huge discount, and Grocery Outlet turns around and sells these products to the consumers. So, in times like this, during a pandemic, when everyone is stocking up on as much food as possible, it only makes sense they're going to go to a place like Grocery Outlet, which has deeply discounted products in mass, in bulk. So I love the macro story on this one. But most importantly, let's take a look at the technicals and the trade setup. All right, so I gave you guys the macro picture. Let's look at the physical executions of the trade yesterday. So here's the setup. So GO, Grocery Outlet, was a recent IPO, debuted in June, made a really nice run initially. And then since then, all it's done is set one massive base. I personally love IPO bases. They make super feisty moves when they break out of these bases, and we saw it yesterday. So we had the macro story along with the technical setup. That's what we love. We love when we can put both together like that. So let's look at the physical executions. We can see this 36. This is the macro area we need to see break for this trade to truly trigger. All right, so that's the macro trigger. We see this mini little daily flag in front of 35.50-ish area. So we see it's very wide and loose, and now we see the stock is tightening up on the daily chart right in front of the trigger. Love that. We know that this stock might be getting close to breaking out. So yesterday, let's look at the physical execution. So here's a 5-minute chart yesterday. So remember the price points we were thinking about, 35.50, and then 36 was that macro trigger. So off the open yesterday, this is the first 5-minute bar. It makes a high, sells off a little bit, and comes and takes out that high. 35.40, 35.50. So that's that first flag I'm seeing. So that triggers, that's where I'm buying 4,000 shares right here. And then remember the macro trigger is this 36 area. So we see a refreshing seller on the offer at 36 figure. From seeing this many times, we can assume that if this breaks, the break is going to be huge because this is an intraday level as well as a macro level. We love that time frame continuity. So this is where I start adding heavily to the position. I go from 4,000 to 6,000 shares here. So we get that pop. It does finally break, and it doesn't look like much, but then we get this break to 37. This is where I start peeling off just some stock I was planning on day trading. So now I'm taking profit a little bit and paying for my risk in this trade. So now if this trade wants to run to 40, 43, 46 coming out of the base like a true swing trade, I have some great stock. I've got a great position, and I'm risk-free right now. If this fails completely, I've already paid for my trade yesterday, so I'm sitting pretty in this one. Love it. Love the setup. Love the name. Love the macro story. All right? So there's my 2-minute trade review. Hope you learned something.